My name is Nick. I'm the co-founder of N Volume. We're basically, I'll tell you a bit more about what we do in a further presentation. But first, I'd like to start with a question. How many of you guys, or could you guys raise your hand if you ever invested in crypto? It can be Bitcoin, NFT, etc. Can you keep your hand up if you invested through a decentralized exchange? Okay, interesting. So, today's financial system is broken, and the reason why is there are complexity of layers throughout the current financial system. So if we take a few steps back and trying to understand why did a bunch of nerds decided to recreate the new financial system and understand what are the problems. So the current financial system is put with layers from payment processors, banks, brokers, clearinghouse, funds, and all these are just middlemen and fees, delays, and friction. They don't add real values. And so basically, if they don't add value, they extract it. So if you try and get a loan right nowadays, you go through countless processes from credit checks, paperwork, delay, and you often face rejection as well. Similar to funds, you go through management fees, lock-up period, withdrawal fees, and all this is added with the sentiment that it also takes time and to understand where your funds are going. And usually funds is very hard to understand where exactly your money is, what is behind the investment strategy. And so with that you get different category of returns from saving account up to 2%, bonds 6%, stocks 10% if you're lucky and patient. But the bottom line is you don't really own your funds, your access to capital is limited, and your exposure to risk is higher than you think. So that's why the nerds, like I mentioned, decided to go to decentralized finance. So what is decentralized finance? It's the current financial system, but without any middleman. There is no banks, no middleman, no brokers. It's just code, yourself, and a smart contract. So returns are obviously higher. So you have staking, where you can basically deposit your token onto a blockchain network like Ethereum, Solana, and you will be rewarded on the creation of new blocks on blockchain. Then you have lendings, where you simply deposit your stablecoin or crypto, if you're on BTC, which will then be lent to a borrower, which you'll earn a fee on the lending, which is considered mid to low risk. And then you have yield farming or liquidity providing, which in this case you would lend your money to a decentralized exchange, and they will pay you back based on the commission fee that they are making. This can be very risky when it comes to a period of volatility, because you can face impermanent losses. And finally, automated vote, which can usually reach up to 25% in returns, where you basically pull your asset into one vault with other individuals, and it would, in essence, invest it in and manage your funds on decentralized exchanges. So the kicker is here, you are always in control of your funds. There is no middleman. You have access to your fund at all time. And this is the real differentiation of decentralized finance. There is no middleman, real-time rates, smart contract can do the work instantly, and incentives come from the protocols, which is sometimes known as the tokens that they issue, the native tokens. It's no paperwork, no approvals, it's just one click and done. It's 100% transparent. You can see the code, the floors, and the reserve, and it's simply yourself and the code. But if it's so great, why isn't everyone on DeFi? The problem is with DeFi is the way it exists today is complicated, meaning that even someone who's been in DeFi or using cryptocurrency since inception still find it very complex to use. You are interface with table UX. You have to manage your wallet, your seed phrase, bridges, gas, and for people who, like I said, haven't been there since inception, it's difficult, and even for people who's been there from inception, is highly difficult because you have to balance all this at the same time. And in DeFi, if you make one mistake, you forget your seed phrase, you put an extra number on the wallet account, you lose it. So one mistake and your funds will go. 10k lost. It's on you. There are a lot of concern about safety as well. There are hacks that happens all the time, rug pulls, flash loans, backdoors. In 2022, there was around 2 billion lost in scam and exploits on DeFi, which is significantly lower than that's currently happening on TradFi, but it's still massive. DeFi is also very expensive. To open a position, it can cost between $10 to $100 on ETH, which is something that you have to take in consideration when you want to trade, for example. Sure, there are protocols like Arbitrum, Optimism, and Solana Avalanche to help you work around all these, but then you have to understand what is bridge, and it comes with also additional risk. So in essence, DeFi is built like Lego. Every protocol that are on DeFi plugs into each other, and if only one of them falls or there's an error or a hack, the entire system collapses. So the reason the current crypto market is 600 million people are investing in the crypto market, but only 10 million are in DeFi. Because to be in DeFi and understand how to work effectively, you need to be a blockchain expert, a security analyst, a trader, and someone who doesn't like to sleep, because timing is everything. And for most people, this is just not realistic. But the bottom line is, yes, DeFi is very powerful. It is offers freedom, better return, full control. But until we fix the complexity, until we remove the frictions, DeFi will remain a playground for a few, and that's the challenge we are here to solve. So welcome to DeFAI. So DeFAI is decentralized finance, and with a combination of artificial intelligence, but more specifically AI agents and machine learning models. It enables to automate and optimize financial processes. So these AI agents can analyze vast amount of data. They can predict market trends, automate trades, manage portfolios, and even optimize risk parameters in real time. DeFi aims to reduce the complexity for users in trading, but also to automate decision making and making DeFi more accessible and efficient for people who are non-technicals, but also lower the barrier to entry. So if we go into a few use cases of DeFi, the first one would be AI managed portfolio. So with DeFi, your AI is autonomously reallocating your assets, adjust risk, and even exit position. Intelligent yield optimization. Your AI hunts for the best farming staking platform and shifts funds accordingly. AI-based credit scoring in DeFi lending. So your AI fine-tune a position on a decentralized exchange like Uniswap v3, version 3. Automated market making adjustments. So your AI tailor financial and personalized DeFi products. Your AI tailor financial products based on user behavior and preference. So DeFi is supposed to lower the barrier entry for retail customers and speed up the adoption while at the same time attract liquidity. And that's what Environment is developing. We are building AI agents for autonomous crypto investment. So how it will work is, and how we will use DeFi will be explained in the next few slides. So we are combining centralized exchange, quant trading algorithms, and AI decision making to offer these services. So why are we using centralized exchange? Because the reality is the trading volume on centralized exchange is over 200 billion a day compared to only 2 billion on DEX. So how it works, you open an account on Volume, you select which central exchange you want to use, for example Binance, then you sign up to Volume and connect your exchange account through an API, which will take a few seconds. You choose a strategy based on your risk level and your preference, and you select which amount of funds you want to trade on your account. Then you click start, and your AI model trades for you on your behalf. It's free, it's not autonomous. So it sounds very easy, but under the hood it's much more complex. So if we look at the infrastructure that we have, so once you connect your exchange account, it issues an API key to users that only allows trading, no withdrawal. So, but even with that, you are still letting us access to an API key, and that's why we spend months to work with AWS experts to build a secure vault system just to store these keys. But in TradFi, as soon as when you work with funds, you put your asset into one fund, which is then managed. We are pioneering the system because we are creating what is called SMA, which is separate management account. So we built a system that allows to send thousands of API to each account individually. There was no existing standard, so we had to create our own, and we use 3 core systems to orchestrate this. So market observer. So we continuously scan the market to filter noise and produce structured and real-time data. Signal analyzer, we matches market data to predefined strategies, evaluate condition to buy and sell actions and make decisions per users based on their risk and preference level. And Zero Executor, so we send real-time API signals to thousands of users at the same time simultaneously with no queues, no delays. Time is critical, so we had to ditch the traditional queue construction that is used on RabbitMQ system and build our custom ultra low latency architecture that is able to send hundreds of thousands of API requests at the same time in less than 5 microseconds. So here's one of the part of the technical map looks like, but this is only a small fraction, so it's very complex. So our system discovers, builds, and build new strategies, and all strategies are built by real human quant engineers. So most AIs nowadays are black box, and what I mean by black box is most people analyze raw data, and the AI rejects data, but they don't know why the data is doing so. So there's no real transparency or clear reasoning behind it. What we use at Environment is called white box AI or glass AI, meaning that every part of the algorithm is interpretable and task specific. Each component is built to solve a specific problem, and its output can be measured in a well-defined way that a human can understand. So this helps avoid hallucination or uncontrolled behavior. So if we look into what a quant model use with real-time sentiment analysis, and it's a variation of 3 fine-tuned LLMs from CryptoBird and FinBird, which is used for understanding financial news, tweets, and on-chain messages into meaningful sentiment that are then classified by our AI model. We use fine-tuned llamas for annotating crypto tweets and price outcome, headline from crypto media and market impact, as well as label Reddit and Telegram content. And finally, GPT-4 for tailored prompts. For example, we use zero-shot and few-shot prediction. For example, is this post likely to trigger market a market panic, a market crash. We use this to cross-check against our in-house model to validate or challenge our signals. So all of this combined allows us to build adaptive AI agents that learns, adjusts, and outperform the market during downturns and analyze the market. We are able to safeguard your asset during downturns and capture growth during spikes. And we do this without any custody. So if we look at the results of Envoy so far, so this is one of the latest models we've been building on. Obviously, it's back tested since 2020. Real data is actually more towards Q2 of 2024. So where's DeFAI and what we do? The truth is, everything behind what we do can be applied in DeFAI. At the moment, we do use focus on central exchange, but this is for specific reasons that I mentioned earlier. But we can build and apply the same logic into decentralized architecture just as easily. So instead of central exchange, we would plug directly into a decentralized exchange like PancakeSwap, for example, and we would apply the same AI layers that create a decentralized autonomous agent. So agent that scan the market, analyzing risk and execute trades, or rebalancing decisions directly on chain. So network like, for example, Polygon and Arbitrum will become the infrastructure layer, the blockstream that can carry instructions and execute transactions across DeFi protocols. It's fully transparent, truthlessly, and permissionless. So in short, we are using the same AI agents, the same adaptive engine, but running entirely on chain. So right now, we're only focusing on retail investors, and there's a reason why. When we started this venture, when we were at the University of Edinburgh 2.5 years ago, we saw that there was a gap that was for retail, because right now retail do not have access to hedge fund quality investment grade solution for the crypto market. So we decided to fill the gap, and our goal was to bring powerful automated investment tools to everyday people who are usually left behind. But we are not stopping there. We are also planning to expand our offering to institutional clients by offering the same AI-powered portfolio management system without the use of any middleman. So no brokers, no clearinghouse, no hidden fees. Just like clients, basically just the clients and the market connected into one. And we don't know exactly what the future of finance will look like. But we know we'll be helping it. We know we'll be the one helping building it. Thank you.